What's going on, guys? We're going to take a little macro overview, technical analysis look on AMC. AMC down 5.5% today, currently trading right around that $13 mark. One thing that I kind of do want to point out now, I know a lot of you guys are holding this stock, believing in the bigger picture, but let's just kind of be a little bit more realistic here and look at, realistically what we have going on since pretty much the beginning of 2021, which we had that big run up all the way to $72. This has been on a weekly downtrend, making lower high after lower high after lower high. If we just kind of point out the top here and then a lower high and then a lower high and then a lower high, a lower high, lower high, lower high, or well, lower low, we have not bounced yet. When and if we bounce would be the next lower high followed by the next flush. So what we're kind of looking at here, and one thing that I do want to point out, you see this line in the sand. The time we broke this weekly 200-day moving average here, we broke it here, and we've now just broken it here. This line in the sand here is what AMC needed to hold. That price was going to be sitting at around let's see, right around $15. Anything over $15 did give AMC a good opportunity to kind of have, some sort of relief bounce here, maybe even a little temporary short gamma squeeze here. But what's going on now is we're starting to build underneath the weekly 200-day moving average. So if we just kind of look at technical analysis and you believe in, the theory of supply and demand, well, AMC potentially has room to come all the way down to $8. I'm not saying that, it's 100%. We do have a Bollinger Band that's sitting here right around this $11 area. We can come down into $11, kind of tag this area, and then again, have this nice little lower high bounce that could probably take us into the 16, maybe even $18 area. But if you're holding this position, you just kind of need to understand what exactly you're getting yourself into. If this does continue to flush, keep in mind we do have earnings, so anything can happen here. They could announce something, completely, something completely off the grid here that kind of just squeezes this temporarily, comes back into these zones. But what I do want you to be mindful of is that even if you do get some sort of bounce here off the earnings, $16 is going to be a rejection spot, as well as $19 is a rejection spot. Realistically, it doesn't look good for some type of, short-term squeeze, short-term run-up until it starts to really clear out that 2275. From 2275 has room all the way up to 27, and then over 27 room to 31. So those are your levels where you're going to need to be taking profits. If they do flush this on earnings, just understand your next macro demand zone is right here around $8. I can see it coming down to $8 and kind of just hanging out in this range between, let's say, 8 and 13 for quite some time. Again, depends on what the overall market wants to do, but just kind of want to throw out some technical levels and some things to be kind of cautious of as we do get into these earnings that are coming up today after the bell. So just keep that in mind. And if you guys like this video, you like this technical analysis, definitely join the Discord that's down in the description box below, as well as subscribing to the YouTube channel. And I will see you guys on the next one.